All right, let's get into it. The stock market can feel like this big, chaotic storm of numbers and charts. But what if we could just hit pause, zoom in on one single day, and figure out what's actually pulling the levers? Well, that's exactly what we're going to do. We're breaking down one fascinating day on Wall Street to see what really makes it tick.
Okay, so let's set the scene. Before this particular day, January 15th, the mood on the street was not great. The market had taken a beating for 2 days in a row, with all the big indexes in the red. Yeah, investors were definitely starting to get a little nervous.
And then, boom, the tide just completely turned. The Dow Jones shot up almost 300 points, and both the S&P 500 and the Nasdaq followed right along with some really solid gains. It was a total 180. So the huge question is, why? What in the world happened to flip the script so fast?
To find our first clue, we actually have to look away from Wall Street. We got to zoom out, way out, to the global stage, because a lot of the time the biggest push comes from major world events.
And here it is. President Trump had been making these military threats against Iran, and that had the markets totally on edge. But then he kind of dialed it back, hinting that maybe a strike wasn't about to happen. And that signal, that really subtle shift in tone, man, investors all over the world heard that loud and clear.
And there's a super direct connection here. Think about it. When things get tense in parts of the world that produce a lot of oil, the price of that oil skyrockets, right? Because everyone's worried about the supply. But when those tensions cool off, the opposite happens. The fear fades away and those prices come right back down.
And they didn't just come down, they tanked. The U.S. crude oil benchmark plunged by about 5%. Now, this is a huge deal. Lower oil prices mean lower costs for businesses, cheaper gas for all of us. It's like a shot in the arm for the entire economy. So the key thing here is that a single political statement can have a massive, immediate impact on your wallet.
But look, global politics was only one piece of the puzzle. To really get why the market rallied, we need to put it under a microscope and look at the specific companies and sectors that were really leading the charge.
At first up is the tech sector, specifically the little semiconductor chips that power, well, everything these days. They had an absolutely amazing day, and you can trace it all back to one blockbuster report from one single industry giant.
That giant? Taiwan Semiconductor, or TSMC as most people know them. They announced a mind-blowing 35% increase in profits from the year before. 35%! A number like that doesn't just raise eyebrows. It's like a signal flare of confidence for the entire industry. And this is where you can just see the ripple effect in real time. So, TSMC's stock soars. Then its key supplier, a company called ASML, jumps even higher. Then you get news of this massive $250 billion US-Taiwan tech deal. I mean, even NVIDIA, which had a rough day before, got pulled up by the current. It's a perfect example of how one company's win can lift up the whole ecosystem.
Now, the financial world was a little more complicated. See, just the day before, some of the really big banks, like JP Morgan and Bank of America, had disappointed everyone with their earnings, and it dragged the market down. But on this day, it was a totally different story. A different crew. Morgan Stanley, BlackRock, Goldman Sachs, they all came out with great results, sending their stocks flying and completely changing the story for the whole sector.
Okay, so we've got global politics and we've got company earnings. But to get the full picture, we have to look at some of the other, less obvious signals that were buzzing around in the background.
One of the most important ones is the 10-year Treasury yield. Now, I know, that sounds super technical, but just think of it like this. It's basically a confidence meter for the economy's health. When investors are feeling good about the future, that yield goes up. It's that simple.
And yep, on this day, the yield did rise. Why? Because we got some really good news about jobs. Way fewer people filed for unemployment than anyone expected. And fewer people out of work is a powerful sign of a strong economy, which, you guessed it, boosted that investor confidence we were just talking about. See how it all connects?
Okay, lightning round. For a final snapshot, let's look at some other markets really quick. Gold, the thing people buy when they're scared, it slipped a bit because investors were feeling better. Bitcoin was doing its usual volatile thing, and the US dollar got a bit stronger. Every one of these is another little piece of this giant financial puzzle.
So we've looked at all these different pieces. What happens when we put them all together? I mean, why does it actually matter that we're picking apart one single day?
Because it gives us the recipe. On this particular day, the recipe for a market rally had 3 key ingredients. First, you had a dose of relief on the world stage. Second, you had powerhouse earnings reports from huge industries. And third, you had solid background data confirming the economy was doing just fine.
So here's the real takeaway. The market isn't just one thing. It's a living, breathing story, and it's being written in real time by dozens of different things, by global politics, by how well companies are doing, by the health of the economy. Every single tick up or down is just a reaction to that big, complicated story.
And that leaves us with one last thing to chew on. We've seen all the data, right? The profits, the job numbers, the logical stuff, but we also saw the market react to a hint of de-escalation, a feeling of relief. So it kind of begs the question, doesn't it? When you strip it all away, how much of what moves the market is pure numbers, and how much of it is just us, our collective hope and fear?